Hi, I'm David Penn, Research Analyst with Finovate. Welcome and thank you for joining us for our special webinar, Don't Disrupt, Avoiding the Dangers of Transformation. In pursuit of disruptive innovations, banks have embarked on digital transformation programs and big data projects, but the low odds for success for these initiatives make them dangerous. 70% of digital transformations fail, according to McKinsey, and Gartner tells us that 60% of big data projects fail. These are investments with high risks and mostly uncertain returns. In today's webinar, you'll learn how AI-powered search can help you to leverage legacy systems and understand data across systems and silos, how to turn inhuman amounts of data into information for human decision makers, how to reduce the cognitive burden on employees so they can use their unique skills, how to increase revenue and cost productivity without reducing risk, and how to scale solutions with natural language processing and machine learning. Our speaker for today is John Finneran. He's the Senior Product Marketing Manager, Financial Services at Sinequa. He's responsible for go-to-market strategy and designing industry-specific use cases and solutions. Sinequa helps financial institutions become information-driven. The platform extracts real-time, relevant information and insights from large amounts of data across all formats. Before handing it over to John, just a quick reminder that this is an interactive presentation, so please be sure to submit your questions to us, and John will have a chance to respond to them over the course of his presentation. So with that, let's turn it over to John. Thanks for joining us, John.
Thank you. Thanks, David. So good morning to everybody in the US and good afternoon to everybody in the UK. So I'll give a quick little background on myself. So, as David said, I look after product marketing for financial services at Sinequa. I spent my whole career in and around financial services, both in the US, Europe, and Asia. I was born in the UK, as you probably gathered from my accent. I've been in marketing, sales, and consulting. Most recently, before Sinequa, I was the account executive for Apple's top 12 strategic financial services clients. All of them were trying to digitally transform, so this experience informs that presentation, or this presentation too. And then the big idea, I think, for today, which we want everybody to take away, is that although financial institutions do need to transform, and they've tried a lot of different ways, there's a less disruptive, lower risk way than the sort of previous methods. And certainly a view of Sinequa is that given the incumbent's assets, which we'll talk about in some more, there really shouldn't be so much to fear from fintechs and so on. So we'll talk about that as we go through the webinar. As David said, any questions at any time, we would like this to be interactive and get your views and opinions and questions. So let me give a quick introduction to Sinequa really quickly, so understand what we're about. So everybody can see that slide, yeah? So really quick on Sinequa, lost a minute or two there. So we're an AI-powered search and analytics platform. Just to stress that we've been doing this for some time. Our background is in NLP labs. We started in Paris. We're sort of growing globally. We're very much focused on the hardest use cases and how we view that in financial services, where there's lots of source systems. Typical financial institution has lots of proprietary systems, as everybody on the call probably knows. We also prefer to get after use cases where it's almost beyond human capability, so the amount of data that's required to process, find, and so on. And that's kind of where we work best, preferably across multiple human languages, so global banks, insurance companies, asset managers is a good area where we work, because that's where natural language processing has the most value. And we can pretty much extract insights from any text-based data source, whether it be a document, structured or unstructured, or a image if it's tagged. So that's us. So moving on. So talk about the current state of financial services. the industry challenges, where it's at, and ways to think about transforming without disrupting everything. So here are the sort of big 5 strategic elements that pretty much every financial institution on earth has to worry about. So on the revenue side, growth is hard, especially in the US. Getting new customers is really a battle of attrition. If Wells loses a customer to Chase, they have to come back. It's a to and fro. It's pretty hard to find new growth. It's probably the same in Europe. Customer experience, certainly based on my experience over the years, and especially at Apple. Apple focuses on customer experience. It's the North Star of everything. The challenge, pretty much every bank in the world is after customer experience, trying to improve it. Expectations rise continuously. And also, interestingly, the fintechs have sliced off specific customer segments and focusing on exceptional customer experience, usually app-based. Third big challenge is employee engagement, which hard to deliver good customer experience if you don't have strong employee engagement, and history of financial services has been somewhat mixed, with the typical call center as an example, where you have 20% plus a year attrition rates. Overall, all of this has to be done in a broad effort of trying to reduce efficiency ratios. This is where AI and artificial intelligence, machine learning have great potential, not in a sense of wholesale replacement of people, but in the sense of let the machines do the heavy lifting on data, ingestion and understanding and presentation, and let people do the interpretation and judgment, which they're uniquely skilled for. And then, of course, all of this has to take place within the regulatory framework. So on the next slide, we're talking about sort of setting up the argument that the incumbents have enormous and formidable assets, which Sinequa would argue not always have been exploited as well as they could have been. Number one is the brand. Banking is all about trust. Without the brand, it's kind of hard to acquire customers and keep them. Customer relationships. Some of the larger U.S. banks have 60 million customers or so, which is the size of the population of England or France. So that's an incredible asset. You have employees who know how everything works. Whether that expertise is being used completely, we would suggest not enough. Risk management is obviously the core function of financial institutions, and knowing how to do that is critical. And probably the biggest asset of all is that all this expertise and experience is sitting in the institutions and probably not being made of enough of as a precious asset. So that's kind of the assets that the incumbents have and need to make the most of. And then the key thing is that all of those strategic goals, revenue growth, customer experience, and so on, data is at the heart of it. But certainly based on the experience we see in financial institutions, typically collecting more data than they can use or analyze. They're relying very heavily on their employees to do all the work in terms of finding, aggregating, analyzing, and presenting it. That's what we call the cognitive burden. That is, has implications. One, it's a costly way to go through life, and two, it's not especially satisfying for employees to spend their time doing heavy-duty data work. Then on, I'm sure a lot of people have seen similar charts. The investment in fintech continues to grow every year. The sort of states of the fintech investment is typical, is kind of picking off. The functions of finance don't really change, but how you deliver them and who delivers them do change. We're seeing a lot of fintechs as coming into just very much focused on customer experience. N26 would be a new European entrant to the US market as an example. It's app-based or a Revolut, focused on one or two use cases, more straightforward products, but providing extremely top quality customer experience. So that threat, although it's also much more partnership now than them versus us kind of approach earlier, still remains, and you see that in pretty much every Wealthfront and Betterment and Lemonade in insurance and so on. So you see that in every sector of financial services. Any questions or comments at this point? Okay, so that goes to the point that the things need to change or improve customer experience, getting costs down, grow revenue. So the next question is, do disrupt or not? And Sinequa would argue need to change, but not anything too dramatic. As much as possible, minimize the risk. A huge part of it depends on who you ask on the advice. Having worked for several of the OEMs, the answer will be that the device is what will change the customer and employee experience. You know, management consultants, and this is not being critical, it's just understanding positions and incentives, that you need a big transformation program. The AI/ML vendors are somewhat overhyped. We'll talk about our AI/ML is pretty pragmatic and practical. It's not going to change everything. It's going to change a lot. It's not going to change everything. It's certainly not an instant answer. And then the data vendors, talking about data lakes and so on, is going to fix everything as well. But then, again, being respectful, the barriers to disruption are significant. This stuff isn't easy. Legacy systems, probably, 50–60% of typical financial institution systems are proprietary, stroke legacy systems. Sort of all or nothing thinking here isn't helpful. The world is no longer a batch world, but there's very valuable data sitting in these legacy systems, and changing them kind of disrupt at your peril. If you look at what's happened with core banking systems, with replacements with in the UK with some of the banks, their TSB being the sort of most infamous example, ended up costing the bank close to $250 million, and the executive team was wiped out as well. So then on the silos, again, being practical and realistic, these are inevitable. There's a reason for them. They're kind of optimizing how you get business. The challenge is sharing information across them. It is more the challenge than the silos. They're not disappearing anytime soon. So the inhuman amounts of data, there's more data than collected than we can kind of analyze or make useful decisions off. So that's, we talked about it briefly before. And then kind of the big one as well is having seen a lot of digital transformations. Whether you buy a lot of Apple devices or Samsung devices or buy software or whatever, changing the people or changing behaviors is probably the hardest part. So that's Sinequa thinks in terms of less minimum viable product and more minimum viable solution, where you kind of need to think hard about the change component. And the more change that you ask for, the harder it's going to be in an organization. And then, of course, the regulatory disruption or environment, rather. Everything has to be done rightly so within that regulatory context. So as David suggested at the beginning of the call, it looks pretty, the prospects for a successful disruptive project or program are pretty low. You may not like the sources, but the figures are directionally correct and fairly common knowledge. So McKinsey saying that 70% of digital transformations fail. Gartner talking about 60% of big data projects fail in terms of either not achieving, mostly in terms of not achieving their business outcomes. And then, for instance, on core banking systems in the US, 43% of banks' core systems are still on COBOL, which has been around for 60 years, which makes significant change harder, but on the negative side. But on the positive side, it all still works. So sort of, again, change with care. Any questions or comments at this section? So given all of this, thinking about the future and what would be a lower risk way of enhancing performance in financial services without disrupting everything. So this is thinking about what those future requirements for that future solution would look like, and there's four that we're kind of focusing on. So the first one is that legacy systems, not going to throw it away. That would be unwise, or all of them. Today's challenge, you do have that landscape of legacy tech systems, which represent millions, if not billions, of dollars, depending on the size of the financial institution. It's extremely risky to change core banking systems. The track record of major successful replacements of core banking systems is a small one. So that kind of means that taking which is Sinequa's view, taking an information-driven approach, avoid the risky rip and replace of legacy systems, think about how to augment and modernize in a lean, agile way to enhance the value of what's already working and being invested in. So then the next requirement is, which we see a lot of, is the typical purchases of software that solves a single problem. We actually believe that's a kind of technical debt, because you're actually compounding the silo problem. And once you have a string of single problem software, it makes sharing information across these applications even harder. So for a future successful solution, have something that addresses multiple problems, so it's not just adding to the silo challenge, which points more towards a platform where you're dissolving the silos and making sharing information easier. The next requirement is, there's probably too much talk about data, so we tend to talk about information. What humans are after to make decisions and predictions is information, not raw data. A lot of the projects going on that we see are migrating mountains of data, whether structured or unstructured, doing big data projects. A lot of it's kind of inputs and cleaning rather than outputs. It's also very disruptive and expensive. So our view is very much focus on the information required, leave the data in place, and that's where AI-powered search comes in. Then final future requirements, it's not machines or humans, it's both together. You want to be synergistic, want to be able to integrate all the data. There's not a whole lot of point of having bits and pieces, just adds to the problem. Currently, a lot of the cognitive burden, as we call it, is imposed on employees, so you want to kind of reduce that, saves money, makes people enjoy their work more. So then the requirement information-driven approach is being able to ingest any kind of data, and very importantly for financial institutions, at any scale. So it means that the machines do the heavy lifting and humans get to apply their unique skills. And we have clients where, for instance, in private banking or wealth management, where the focus should be on client relationships, not pulling together the data for a pitch meeting or whatever. Any questions before I move on to?
There's one thing, John, I just wanted to touch on some very interesting points that you made both in this section and in the previous section. And I wanted to ask one quick question about taking a look at the information I mentioned at the beginning that you just repeated about the challenge of digital transformation and big data projects. I have to imagine that for some of the folks in our audience, those numbers, those percentages are exceptionally daunting. And I'm wondering if maybe just a moment to reflect on those numbers, that 70% failure rate, that 60% failure rate for big data, and maybe some insights from yourself as to why you think some of the key reasons why that's happening, why those numbers are just so huge.
Yeah, thanks, David. So I think one, there's overconfidence because doing this is not easy. So going across a multi-line of business financial institution and trying to change everything is an extremely difficult thing to do. Technically, there's a lot going on, ripping and replacing, core banking being a good example, is extremely hard to do. So the big project approach is still around somewhat and is quite hazardous. So I think that approach is challenge number one. Second thing is, big one is not taking a broad enough view of it. Certainly based on experience at Apple, we saw a lot of views from the executive suite that they should transform, but rather less on the day-to-day level. So communicating that out is key. It's like to use the Apple view of the world, it's like a product launch. So a program of change should be like a product launch with a headline, communicating it very clearly and repeatedly, and so on. And then finally, sort of rhetoric around agile and lean startup and so on. That sort of thinking, I'm not sure it's completely permeated, but it's hard to. It's a very hard challenge to do. Nobody's trivializing how hard it is to do.
Sure. That makes a great deal of sense. And just I wanted to remind before you continue, sort of as we're nearing the halfway mark, just wanted to remind our audience that we are taking questions. So feel free. There's a Q&A box down at the bottom. So feel free to go ahead and send us your questions, and we'll make sure we reserve a bit of time toward the end of John's presentation so that we can go ahead and get some of those questions in as well. So again, I'm sorry about that, John, but I did want to touch on that one question, seeing those stats. So please go on.
Thank you. So now we talk about, need to make a big change in performance of financial institutions without disrupting the whole place and all their attendant risks. So how do you do that? So, so this is we're getting into Sinequa and AI-powered search and so on. So this slide fundamentally sums up the heart of the Sinequa solution. So on the left, you see that typically it's somewhat overstated, but employees and humans are doing most of the work, carrying the full cognitive burden. Irrespective of the use case, it kind of boils down to you need to have the information at your fingertips, whether you're in the call center, whether you're in a bank branch, whether you're an insurance agent, whether you're a wealth manager. The commonalities between the use cases are probably greater than the differences, and you need to have that information for customers at your fingertips. If you're in compliance or risk, you want to have the information on potential fraud or privacy breaches and so on, again at your fingertips. So data and information are key, and a lot of roles, when you look at them, are spending way too much time just looking for data. You know, the figures can be anything from 45 minutes to 90 minutes a day, and that's just the beginning. Is kind of looking for data. How do you turn it into useful information is probably a bigger question. So that's fundamentally what on the right hand side is what Sinequa does. We can pull in data from pretty much any system. 200 different systems, 350 different formats. So often some financial institutions, will have 200 or 300 different software applications. So we can kind of handle all that, to ingest all of the content, and then fundamentally this is simplifying understanding the meaning of all this data in documents is where natural language processing comes in. What are the concepts? What are the entities? What do you need to know about an insurance policy? And that can be in English or French or German or Japanese or Mandarin and so on, whichever the 33 languages. And then again, somewhat simplistically, the software performance improves. So we'll talk about a solution in more depth in a second. Predicting the confidentiality category of a document. Machine learning will get better, and we use machine learning to get better and better at the particular task once a model has been tested and calibrated. And then finally, we present that information. So to your employee or the person working, a lot of that cognitive burden has been taken away from them. So that's kind of the heart of Sinequa. Any questions or comments on that very high level overview? We'll blame the silence on the heat. So moving on to, so we've been at sort of the big broader picture level. So tying down more to real life use cases so that people can translate to their own circumstances, hopefully. So we have initial 3 use cases solutions that we're focused on, and there'll be many more to come. A key part of the discipline of any solution building or use case analysis is to talk about the problems. So the first one is called keeping secret secret, and we'll go through that in a little bit more depth in a minute. But the problem is that in large banks in particular, we're most familiar, so wealth, private banking, M&A, whatever function, there's a lot of confidential data around. And the average process still relies very heavily on the diligence of the individual employee, and creates a lot of manual work and isn't especially assuring. There's no systematic assurance that that process is working. should the regulators decide to visit. And the other big thing is it just doesn't scale. So if you're a bank with 67,000 employees, which is one of our clients globally, that may be okay in Luxembourg, but it's not okay if you're going to export the process across the world. Then the second solution we call Service Alpha. So this is somewhat specific to the US, but has broader application in Europe as well. So anybody in investment management knows that active investment managers are struggling or competing hard to retain their assets under management from the index funds and ETFs and so on. So one way they compete obviously is superior investment performance, alpha. So our Service Alpha solution is also emphasizing providing exceptional service and hence Service Alpha. So that's thinking there and sort of a pre-built solution. And then the third sort of focus area, which for certainly every retail bank I've ever seen is a struggle, is for the world's 9th largest bank, the normal investment, sales force, all the rest of it. But still, their sales and service people didn't have all their information at their fingertips, and then also not having the history of the customer's journey, email interchanges being an example of unstructured. Being able to have that all in front of them was a big step forward and a very powerful ROI. So any questions before I jump into keeping secret secret?
I think let's go directly into that. I had a question, but I'd like to go ahead and hear you elaborate a little bit more on sort of maybe each of these three elements, perhaps.
Okay, thanks. So keeping secret secret is our business solution focused on financial services, focused on the problem it addresses is confidential information is everywhere, and how to do that almost beyond human capabilities, not almost, beyond human capabilities to manage in a large financial institution. So talk about the customer in the abstract rather than naming any names. So it's a top 20 bank in the world, business scope across a load of businesses, corporate investment, huge retail bank, wealth and asset management, have private banking, operating in 67 countries, many different languages. So that's kind of our ideal use case. Lots of systems, making it hard to extract data and get a bank-wide view of any particular problem. Then the challenge is that confidential information is spread everywhere. It's in proprietary systems, of which typically many in the financial sector. Cloud, Amazon, Google, IBM, all the rest of it have helped in some ways, but in other ways made the situation more complicated, more sources to search, and we can handle all that. But then you've got data flowing to external sources, the clearing houses and exchanges and all the rest of it. So basically, it's a tough challenge to get a handle on all of that confidential information. And the little red icons illustrating that. And then the big point is that it's very diverse, so it's not just documents marked confidential or keep private. It's in documents, it could be an email. A lot of the information is regulated, so if it's personally identifiable information or non-public information, it's regulated. So there's a lot of consequences if this is leaked or breached. And of course, the other huge challenge is it's always changing as well. There's new documents coming, there's new information. Some things, the average way that we find it's managed is a bank will have 3 or 4 categories of different levels of confidential information. Doesn't really matter what the particular schema is, but 1, never be shared, 2, share with certain people, restricted, and so on, and then 4, public, and so on. So what data will go in and out of those levels of confidentiality, which makes it extremely hard to manage. So here's the, if you like, pre-Sinequa process. So all the work is being loaded on the employees. For example, on the confidentiality idea or solution, they have to open the document, understand its current confidentiality category. Is it high, medium, or low, or whatever? They have to work out the document content, review it, and then assess whether the confidentiality category is still correct, and then tag it properly. And all of this takes a load of time. It's not very systematic. You're kind of relying on the due diligence and skills of employees, which is good, but it's not providing a scientific view of, okay, this process is working well. And then it can't scale across the bank or the particular institution, and also importantly, it's distracting people from their real work. In this case, it was for a private bank of focusing on client relationships. So then the solution, what the solution looks like, again, simplified and stripped down. So fundamentally, the software does most of the work, if not almost all of it. And the sequence, it wouldn't be as sequential as this, so we'd use cognitive analytics, NLP, to go through this document, understand the current confidentiality category, go through the content, review whether it's confidential or not, and tag that. So that's kind of where the NLP comes in, very stripped down interpretation of it. Then use machine learning, build a model and train it on lots of documents and what confidentiality means, to get to the point where there's a prediction. So if I'm a investment banking analyst and a document comes up, using machine learning, it will already have understood the content and then predict that this is the highest level of confidentiality or whatever. So that's kind of that's how the sort of 2 major technologies in Sinequa interrelate. In the particular use case, it will vary, and they'll operate simultaneously. One feeds the other, but very stripped down. That's how they work. So what does it all mean for economics? So the most important thing is that the confidentiality is protected more effectively. It's kind of industrialized as opposed to a craft approach of relying on employees. It can be scaled, go across different lines of business, different languages, which in this particular client's case it is. It saves time and money. So as a business case, this was just for saving around $44 million US a year, and this is only for a very small business unit, private banking, where the estimate was that 45 minutes a day was being spent by each employee in the private bank, just doing this mostly manual process. And then finally, a big thing is that it's a platform for the whole bank. So it's in private banking, but it can be used for the investment bank. It can be used for the retail bank or the investment bank, with some changes in migrating across, but a lot less than buying a single point piece of software. And then finally, how we engage. So our strong preference is we very much want to be ROI driven and tough use cases. So we have what we call a rapid value assessment, where we'll look for workflows with very heavy cognitive burdens, where AI-powered search and machine learning could help assess how long that is taking your employees, all the documents they need, how many systems, so on and so on. Understand those, present how we potentially help, and then run calculate the estimated ROI, and then run a proof of concept or pilot to prove out both the financial value and also the technical feasibility in the environment. So that is that, if there's any questions.
Yeah, again, I just wanted to remind our audience to go ahead and send us any questions that you might have about Sinequa, about John's presentation. We have some time that we've reserved here at the end of the presentation just for that purpose. I have a question or two for myself, but I certainly don't want to hog all of John this morning's afternoon. So if you do have any questions, please feel free to go ahead and include them in the Q&A, and again, we'll get to those as they come in. I just had one off the top, and it sort of goes back to a slide, maybe 4 slides back, and it just had to do with when you compared that sort of heavy cognitive burden process with the Sinequa process, and it was very, very clear how you could see just what the role of the technology was. The one thing I was curious is the human part of the Sinequa process. You mentioned the components with the machine learning and the cognitive analytics. How does the human intervention enhance that particular part where you have that human AI sort of combination at work?
So the goal is the goal is that the heavy lifting is done by the machine, to use the fashionable term, and then the information is presented to the person who needs a decision or prediction. So you're saving all of that, gathering the data, aggregating it, analyzing it, and so on. It's not trying to make the decision for the human. It's trying to improve the information that they have available to apply their judgment. These things aren't plug and I think for most people as well. Any machine learning software or project is different than a sort of traditional software project or even agile. There's no guaranteed outcome. Machine learning models need to be trained. You need to have minimum sample sizes. The language needs to be confirmed and all the rest of it, and they need to be iterated and calibrated to get good predictions and good decisions. So that's kind of the challenge, if you like. But then the positive is that they get, unlike rules-driven software, they get better and better. But we're trying to take the cognitive load away from the human to help them make better judgments and so on. And then there's also intent. So the software also, when searching, it's not interprets the intent of what you're, like Google for the public web, what you're thinking about to improve those answers. So it's very much trying to be symbiotic rather than. There's an element of automation where the heavy lifting on the data side is done by the software, but not trying to overtake the judgment and the interpretation.
Right. You think the point that you made before, humans for interpretation and judgment, AI for heavy lifting, which I thought was sort of a good shorthand to keep in mind. One thing I'm curious about with, and again, I'm sort of maybe a little fixated on the challenge that the companies have trying to make this happen. What about some of the cultural challenges? I definitely can see from a technological perspective, there's so many moving parts that are involved. But I'm thinking also just from the workflow, from people getting used to doing their work differently. Are those challenges that come up as Sinequa is involved in the process? Do those come up later down the line? How does that play into this?
So it's a good question. So I think the big thing is that, so fundamentally we leave everything alone, so number one, so you don't have that cultural chasm. Everything is in place, no data is getting moved around, there's no new systems. We will ingest from the existing setup, so that kind of reduces the friction big time. Then the second thing is the UI concept and appearance is familiar. It's extremely complicated. Underneath, it's really complicated search, but the UI concept, it looks like a search box, and it's presented as a variety of ways to present. So that kind of direct interaction, there is typically no shock of change on that. So the GUI looks familiar and so on. So the underlying systems, I think it's a good question. The underlying systems don't change. The way of interacting is familiar. So it minimizes the friction of change.
Mm-hmm. Mm-hmm. One of the questions that we got that came in was, and to some degree I think you've addressed it, but it might be sort of the question in many respects, and it has to do about the relationship between incumbents and fintech challengers. And this person's question was, how worried should incumbents be about fintech challengers? And at least the takeaway that I got from your presentation, and please correct me to the extent that I've misunderstood, is that there is less about worry and more about how to find the right fit so that fintechs can help respond to the needs of the incumbents, and the incumbent can leverage its assets effectively through whatever solutions that the fintech is providing. That it is less of a rivalry, perhaps, and more of how do these two entities figure out ways to work more productively together?
Yeah, so it's a good question. So I think it's fintechs, with a couple of exceptions, are chipping away at particular use cases. So really, any of the large European or US banks, if you asked what is the impact of fintechs been on their businesses and franchise, it would be fairly low, I think, because of their assets, the brand, 60 million customers. They know all about risk and all that, so whatever that is. But where they have been chipped away at is very specific use cases and actually specific segments of users. So to use European example, because there's a lot more challenger banks in Europe. So N26 and Revolut. So who have they taken? So they've taken in, provided a really good mobile-driven banking experience fundamentally to a millennial population. So has that hurt European banks? Maybe, they would have liked to have those customers, but again, the fintechs have the problem of customer acquisition. It's not that easy to acquire customers. But they have raised the bar in terms of customer experience. So you see it in the US with Chase's FinBank, where that's been pulled. It's not that easy to compete with a sublime, mobile experience, which has been built from the sort of ground up. So I think it's some impact, but certainly the incumbents have plenty of strength and brand and assets to thrive and prosper.
Right. Excellent. Excellent. Just to let them know, we're coming up close to the top of the hour, so we don't have a great deal of time left. So if for those of you who do have questions and haven't gotten them to us yet, now would be the ideal time to do so. I do want to let everyone know that the presentation has been recorded and will be made available on the Finovate blog shortly after the presentation, so be sure to either subscribe to the blog or check in with the blog. And as soon as that is available, you'll get the access if you want to take a look back over some of the material and see some of the things that John was talking about, maybe spend a little bit more time with those. One thing that really struck me as I was listening to, as I sort of referred to them as the moving parts and all the moving parts involved in this process, was how important it seemed for leadership on the side of your partners, of the companies with whom you're working, to really kind of both to work with you all well, but to try to make sure that a lot of this doesn't get out of hand, that folks are able to remain focused on exactly why they're doing the initiatives that they're doing. And I'm just curious from your perspective, one, do you agree that that is a major issue, that the leadership of the partner really is critical to helping making this happen, and if that's been what you've experienced in doing this?
Yeah, it is, David. So I think the best practice is one use case at a time, certainly based on personal experience. If you try to do multiple things, end up not really doing much of anything.
Right.
So one use case at a time, and then it's not rocket science, but start with the highest value and kind of work down from that, and then again, everybody on the call will know this. You've got to show results before you get another shot at goal, or whatever sporting metaphor you prefer. And so it's kind of that basic stuff. And I again, in personal experience at Apple and other companies, overambition can be dangerous without showing sort of short-term, snappy results.
Certainly. I definitely think that idea of being able to take one step at a time, it's critical in most things, and certainly, definitely a critical one in here. Again, when you've got so many different ways for things to not work out right, as we looked before with some of those statistics as well. We are about running out of time. We're coming up on the top of the hour, and I just wanted to sort of maybe if you had sort of a top takeaway that maybe you wanted to provide for our audience of one main idea that you wanted folks to sort of part with, what would you say that would be with regard to some of these issues of digital transformation and the ability of AI-enabled technologies to help that process?
I would say, so I'll put about this for a bit. You already know the answer's inside. You just have to find it. There's a tendency to always look outside for the answers. The answers are typically inside. The employees know, the asset exists inside. Just always like looking to the outside seems counterproductive. So the answer is there. Just have to look for it.
Excellent.
Inside.
Excellent. Mm-hmm. Oh, very good, and a very hopeful and perhaps optimistic note to end on as well. I think for companies to feel that the solutions to the problems are something that they already have. They just perhaps need a little bit of outside assistance to help find that. Yeah,
that's good.
Excellent. Well, thank you very much, John, for joining us for a very, very fascinating presentation on digital transformation. Definitely the talk of the fintech town right now, and to hear some of your insights on that process in terms of what it is and what it isn't, I think are going to be very helpful as this conversation continues both amongst our Finovate community as well as the broader fintech community as well. So thank you very, very much for sharing those thoughts with us today.
Thank you to Finovate, and thanks to everybody for participating. I appreciate your time.
Excellent, excellent. And again, I think that's all the time that we have for today. Again, our thanks to John for his sharing his insights with his presentation today. Again, as I mentioned, please note the webinar is going to be recorded, or has been recorded, I should say, and will be available on the Finovate blog soon, so that you'll be able to go ahead and review it and look and dive deeper maybe into some of the different individual topics that he was able to discuss. So again, thank you very much for joining us. Be sure to stay tuned to the Finovate blog for future webinars on similar and other topics that are very much important to those of us who are paying attention to innovations in financial technology today. So once again, thank you all very much. Thank you, John, and have a great day. Goodbye.
Thanks a lot.